Hi, Peter Rose, Longwood Currency Trading. It's early March of 2022, and I was talking with someone the other day about how much time they were spending trading, and we got into just a short discussion. It's over email, but it brought up an interesting concept that we just discussed kind of briefly, and that was the effect that the amount of time that you spend trading and how that affects your overall trading results. And in my experience, and in a lot of the folks that I've talked with, the more time you spend at the trading desk trading, the worse your trading results. And so you have to ask yourself, well, why is that? You wouldn't think that. If you were playing baseball, the more times that you get up there and practice your pitching or your batting or whatever it is that you're doing, or any skill, it would seem that your results would get better as a result of that. The other factor that comes into play is something that I believe in, is that you trade small and you trade a lot, which would seem to conflict the amount of time that you actually spend trading, because you're running into a finite compression there as to trading a lot within a short time frame, if in fact the more time that you spend trading is detrimental. Well, let's look at the detrimental side of it. Why would it be detrimental to sit at the desk and keep trading? I think that over the long run, it's just like the craps table at the casino. The best odds that you're going to get is pass line craps, and it's 1.43% against you. Something like that. Don't quote me on that, but it's around 1.43% against you, which means that the longer you play at the table, the greater the statistical odds are that over the long run you'll lose 1.4% of your money. So that's great for the casino. It's the smallest edge, I think, in the casino. There's bets that you can place in games you can play where it's 36% against you. But even at 1.4%, if you're the house at craps, you're going to come way ahead. I mean, look, people are betting $100 a throw. You can throw the dice 60 times an hour, and so your table is doing a couple of $100,000 an hour. And the table figures they're going to get 1.4% of that, 1% of a couple of $100,000, a couple of $1,000. That's just the way the statistics are. So in any endeavor where you are risking an expectation for return, the odds are against you. Whereas in any game where it's practicing to increase your skill level, that's a whole other thing. Then the more time you spend at doing something, it betters your skill. Or you could say, well, I should spend a lot of time then because that would increase my skill. But it doesn't work that way. It's a different thing. It's something that I've come to learn very well, because I've spent over 50 years in the martial arts practicing karate. And that's a skill that every day and each and every day you get better by practicing and practicing and practicing. Everything that you do, from reaching for your cup of coffee, has to do with something with that martial arts training, or baseball, or tennis, or chess, or anything. But why not in trading? Your emotions, well, let's put it this way. If I'm practicing baseball, my baseball swing, or my basketball shot, whatever, practicing my basketball shot. You know, the guys that get into the NBA aren't the kids that are throwing the ball around on the weekends and playing hoops at school and all that other kind of crap. It's the guy that's out in the rain on the dirt court pitching basketballs in the rain at 10 o'clock at night. That's the guy that's going to get into the NBA. It's that consistent practice that leads them to the game where they can apply that practice. The problem with trading is that you're in the game. When you sit down at that trading desk, you're in the game. You're not practicing. You're not supposed to be practicing. You're supposed to be doing. So how do you get good at trading if the more that you trade is detrimental to the results that you have? And I have to say that even if you're an experienced trader, if you're trading a lot, and a lot on a daily basis, sitting at the desk, it's sitting at the desk, not so much the trading. And there's a differentiation there. If you're sitting there at the trading desk, looking at the screen, you're going to find a trade. You will, because that's why you're sitting there. If you have a hammer in your hand, you're looking for a nail. If you're sitting at the trading desk, you're looking for a trade. And you know what? Even if the whole place is going to shit, you'll find a trade. I've called that an anticipatory trade, and you can look back through my portfolio videos and blog posts, and I talk extensively about anticipatory trades. Oh, I think that this looks like it could be pretty good. Not, oh man, there's a setup. I'm gonna get ready for that. No, you're sitting there looking for something, and your little mind is playing shit with you, and the little bridge troll that I have on my left shoulder here, Ed, he's going to be whispering in my ear, "Hey, Peter, you got a trade opportunity here. Let's get the bid-ask going." You cannot do that. However, if you know what you're doing, you can sit there and trade because you're actively involved in doing the thing that you've prepared for. If you're actively trading and you're not prepared, you're going to lose a lot of money. And it's like my friend Langer's, the Scruffy trader over at in the UK, says, score, stop. In other words, he'll take 2 trades and he'll win, and then he closes up shop. And he's been doing it 20 years. You could say, well, Jesus, the dice are rolling in my favor. I should keep going. No. Because the statistics are going against you. What Langer's is trying to prevent you from doing is that if you're a beginner, from going in there and doing that, in what I'm calling that anticipatory trade, is that you make a couple of trades and you make your hit, and then you go, oh, let me look for the next opportunity. Well, you're going to get your brain crushed. If you have a lot of experience and you have a great win-to-loss ratio, then you can trade a lot. You can't sit there and look for the trades. You have to know what's going on, and you have to, for example, we all trade with the momentum of price. And so if price is moving and you peel some off, or you get out, you look for the opportunity to get back in, and all you're doing is getting in and getting out as that price is advancing. That's what I do. I don't sit there and go, oh, I'm going to go ride this for 30 pips, because it'll go up 10 or 15 pips, and then it'll come back down 10 or 15 pips, and then it'll go below hit my stop, and I'm gone. Or I could have had 10 pips. So I pick it off as I go. And if the momentum is still going, I can always get in. But you have to be skilled in determining if the price has the necessary momentum to keep going. And that's why for most traders that don't have a lot of experience, that don't have maybe 1,000 trades under their belt, judging that momentum becomes problematic, yeah? And so you want to sit down at the trading desk. Is there a trading opportunity there? Yep, there is. Okay, put your money on the line and see how it goes. If you get bumped out twice in a row, you're wrong in your trading analysis, your entry analysis. So go get a cup of coffee. Forget about it for the day. Like somebody told me one time, the dice are always being thrown somewhere in the world, and that currency market is open 24/7, 5 days a week. If you're sitting at that desk thinking that you've got to make a trade today because you don't want to miss an opportunity, man, go take up knitting or something, because you're just going to lose your ass if you're out there. You could trust me on this. I've been doing this a while now. If you really know what you're doing and you want to sit there and bang away, that's fine. But don't do it for longer than a couple of hours, because then you become obsessive with it, and just that length of time you will try to find anticipatory trades. Limit yourself to a couple hours a day. Life is great out there. Look, if you can't make enough money to make the yearly amount goal that you want to make, then you don't have the skill to make the money in the first place. You're not going to make that money by trading more, by sitting at the trading desk for 4 hours or 8 hours. I've done that. I've got up at 2 o'clock and 2:30 in the morning to catch the London Open. I've done that. It doesn't do any good to sit there and wait and sit there and hope and bet. Oh, there's a trade. I'll take that trade. And then you're successful. Oh, what are you going to do? You're going to wait for 45 minutes until the next one comes along? No. It doesn't work that way. If you know what you're doing, you're going to take your series of trades, boom, 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 boom. Now that might be 3 of them. That might be 1. I've done as many as 8 or 10 trades or more. Bang, 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 all around the place. Because the environment, I'm familiar with that environment. I know that environment. I have rules to deal in that environment. And I'm going to take advantage of it. But I'm not going to go all in and sit there and wait with my thumb in my ass hoping that thing is going to go 20, 25, or 30 pips. And I think one of the worst things that you can do, unless you're following a long trend and staging into the thing as it goes, that gives you the time to do that. But if you have immediate momentum that you're taking advantage of on a short-term basis, you're not sure whether that constitutes a swing, right? And so if you're going to continue to ride that momentum, you don't just sit there with your price and add to it, because that wasn't the game plan that you got in there for. It rises up until it's reasonable to expect a retracement. Boom. Pull your chips off the table and see what happens. 9 times out of 10, that price will retrace. Maybe it'll go back up and continue in the direction it was going to go. But more often than not, right, you'll see the thing come down and you go, wow, I'm glad I got out of that. Now, sometimes it'll continue on up. You can't sit there and say, oh, I missed that 10 pips. If I'd have stayed in, I'd have made that 10 pips. No, you wouldn't have, because that would have been the time the fucking thing would have gone down 30 pips and you'd have lost your ass and you'd be whining and crying in your beer that next day. Now, get out. If it continues to go up, make sure that the momentum is clean, and there are different ways that you do that you can look at the momentum. And if it looks like it's a continuation of the good trade that you started with, not, oh, that's a new opportunity. No, there's no new opportunity there. Because if you walked in the room right then, would that be a good place to enter? If you got good rules, 9 times out of 10, it's going to tell you, there's no trade here. This thing is blowing off. We don't know when it's going to implode on itself. We're going to get out. So you have to be very careful here as you talk about re-entering that position. But you look at that, get out, pull it off, and then you wait. Maybe you'll lose 5 or 8 pips as the thing continues to go up. What you're waiting for is for price to come back to you in a manner that indicates it's just a rest or a minor retracement. And then you can call that a continuation of the momentum of a longer period candle on a higher time frame, and you can re-enter. But if you're going to do that stuff, you're scalping, so you're not even setting stops. You have to have the discipline to say, whoa, this didn't work out. 5 pips, I'm lost. Boom, I'm out. Because you're only picking off 2, 3, 4, 8 pips, 5 pips at a time as this price is rising up. You can't afford to sit there and wait for the fucking thing to go back 20 pips to prove that you're wrong. Because then you're sitting there for 3 or 4 hours, and what are you going to do? Walk away with a hamburger? The equivalent of a hamburger? You can't do that. That's silly. Man, oh man, oh man. I talk to so many people that just do not have the concept of how to organize into a trading plan. And I'm sorry, but you can't read a book about it. You either have somebody teach you, or you read the damn books and try it and lose your money and figure it out on your own. That's what I did. It cost me $40,000 to learn that. So that's up to you. You know, all I can tell you is if you try to learn it on your own or you try to learn it from books, you're going to lose. If you don't have a good grip on your risk management, or you're in there playing heavy with a lot of money on a large account, thinking you know what you're doing because you're a hero in your sim account, or whatever delusion that you're under, it's going to cost you a lot of money. It's going to cost you a lot more money. I'll guarantee you this. Your losses, if you're trying to do this on your own, will far exceed the amount of money that you'd have to pay somebody to teach them, to teach you, right? I mean, that's my opinion. I charge a lot of money to do that. I charge more money than probably anybody else to do that, because I don't have time to waste with people that aren't going to do what they're told to do. That comes out of my martial arts background. You know, when people are trusting their lives to you in learning self-defense and karate, you can't be wishy-washy about, well, you know, maybe if I say this is going to hurt your feelings. No. You do this. If you don't want to do that, then you're not my student, because I can't help you. I'm the teacher. So you listen to the teacher and you do what he asks you to do. Now, there are a lot of teachers out there that will tell you that, but they really don't know how to teach. They may know how to do it themselves, but they may not know how to teach. So the person that you're going to go to ask them that, to help you, the money isn't at question. It's, what are you going to teach me? How are you going to teach me? Are you teaching me what you want to teach me, or are you teaching me what I need to know? And that requires getting to know the student. You can't just, particularly in trading, you know, I can go into a math class in college, and I'm treated at the norm level. This is the expectation. This is the norm. If I'm really smart, I'm going to be bored to death. And if I'm not quite so smart and I'm not at that norm level, which I've been blended in because of an average, I'm not going to do very well. And if the teacher is mechanical, the guy at the bottom end of the curve, he's screwed. He isn't going to be able to learn anything. The classes are very small, so the instructor gets to know each person and present the material differently many times, so that each person in the group gets it. That's what I did in karate. I never enjoyed teaching a class of 30 people. That was just, I wasn't interested in that. Because everybody gets treated at the norm. Here's an up block, everybody do it. And some people can do it and some people can't. But, you know, we used to look at our process of training, and when I would teach people to get the black belt level, and senior black belt levels, not just first degree, when you get to second or third degree black belt and they want to go out and open their own school, I said, don't open a big school. Don't have 150 people in your club. I had 110 people in my school when I was teaching commercially. Now, I would have maybe 25 show up at a time for a class, and I'd have 3 or 4 classes during the day so I could spread them out. But even 25, that was a lot of people. You know, generally speaking, 10, 12 people in a class. That was a good-sized class. And I was a tough son of a bitch anyway, so people wouldn't stay with me too long because they figured they were going to come in and get treated like they were walking into a restaurant and getting served a steak. You could be, you know, well, would you like your steak rare or would you like it medium? And would you like cucumber salsa on your salad? Come on, please. This is what you do. This is how you do it. 80% of the people don't like to do that. They hit the door and they go to some fancy other club. But the folks that would stay, those folks needed individual attention because each person was there for a different reason. They had different expectations and fears. And we're all the same way into trading. So you're different than I am. You're different than the guy sitting next to you that's your friend and who's also trading. And the two of you aren't going to be able to trade the same way, and you shouldn't. Now, there's some principles that you both better follow. And there's some principles that whoever's going to teach you better follow. But they better understand how to teach in order to make sure that you're comfortable in what you're learning. How are you going to get that comfortable reading a book? I don't know. But I'll tell you this. You're not going to learn it by sitting in front of that friggin' trading screen hour after hour after hour, because you're going to be doing anticipatory trades and your results will go down exponentially with the amount of time you spend at that screen. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.